Hello and welcome to the Cryptocurrency News Channel. We're going to be walking around in the Arboretum, Wisconsin Arboretum, as we actually do this video. And so you're going to be able to see a lot of the flora that's actually blooming. Maybe a couple of birds will appear on the screen, but I'm not using hyper zoom, so you probably won't see too many of those small birds. Anyways, if you want to join me on my live stream or my Twitter and stuff, all that stuff's in the description. But let's actually talk about today's topic, which is why crypto signals don't matter. The TA signals are more or less irrelevant for predictions, and also how much control the whales actually have. You know, if you look up crypto news, you'll always see like, oh my gosh, this TA signal or this buy-sell signal says buy or sell. It's making this pattern, cup and handle, buy or sell. And then like it ends up being totally wrong. Even if I go to TradingView, if I look at like the predictions, like even if people who have been right in the past, in the next 2 weeks, they'll be completely off. So essentially, all those graphs, charts, and stuff is basically educated guessing. And sometimes the educated guessing is not that much better than the random guessing. Sometimes like when the market's like fairly stable, it might actually work. But then when the market like is hyperventilating and it can dump and pump at any time, it doesn't really work at all. That's because crypto is a very young market. Like whales from like Korea or other countries can really pump it. And the thing is, TA cannot actually predict the pattern of those movements. So like for Bitcoin, sometimes it has some relevance. For smaller altcoins, it really doesn't have much relevance at all, because smaller altcoins essentially follow Bitcoin, but they do so in a much more volatile way. Like sometimes on the 15-20 minute graph, I might be able to see something on the TA, but generally over the long term, especially the more volatile coins, like half of them end up being scams, so you can't really, the charts and graphs don't really matter for that at all. And a lot of times, like a couple of players can actually control the market. And your charts and graphs and signals don't really account for that at all. Charts and graphs and signals, they're much better for a mature market. Even the stock market, they're not 100%, because we all know that past performance is not an indicator of future performance. Well, it is, but it's definitely not a perfect indicator of future performance. And from what I've seen from like TradingView and the Cointelegraph and CoinDesk, all the TA charts, they're really not much better than just random guessing. There are a couple of people I do follow that have like some sense of where things are going, and they maybe do a little better, but even they're not perfect. And I definitely go much more off news and stuff than charts and graphs. And even news isn't perfect because people tend to buy the rumor and then sell the news. And it's hard for me to predict when they'll start selling the news. Like sometimes they'll start selling a day or two before. Sometimes they'll sell like right at the date, and sometimes they'll sell like weeks before. So it's very hard to tell. Like this Bitcoin halving, I mean, I still don't really know which way it's moving after the halving. I think it's going down, but I'm not really sure. The Litecoin halving, it basically plateaued like a month and a half before the halving, and then it started going down, or at least sideways. But it didn't really start going down until right after the halving. The BCH BSV thing basically just plateaued, and now it's following Bitcoin again. So everything's kind of like, you know, everything is sort of random. I'm sure the big players have a lot to do with it, but let's actually talk about the whales now. How much control do they actually have? So whales are powerful, but they're not all powerful and all knowing, and they do make mistakes. A lot of people speak of whales as one entity. That's actually wrong. Whales are not one single entity. There are many whales, and whales aren't insects. They're not like bees or ants. They're not like a hive mind. They don't all work together in unison for one common goal. No. Whales are greedy bastards just like anyone else, and they all act on their own interest, which is why you see whales become guppies at times, because one whale will screw up and then they'll lose a lot of their money. I mean, it depends what you call a whale. Some people will call like someone with over 500 Bitcoins a whale. Other people have that market 10,000 Bitcoins. But we've seen a lot of whales lose their money as well in the market. So they're definitely not all powerful. In Mortal Kombat terms, they're like just the regular demigods like Raiden or Shao Kahn, you know? Like Raiden and Shao Kahn are strong, but they're not all powerful. Raiden's been defeated a number of times, and Shao Kahn has been defeated several times as well. His invasion of Earthrealm has always failed, notably by Liu Kang, who is essentially just a really strong human until Mortal Kombat 11. So the thing is, like, they're definitely not undefeatable. Now, that doesn't mean you should challenge a whale or a fat cat to financial Mortal Kombat. You'll probably lose, and then they'll kill you in a financial sense. But the thing is, they're not undefeatable and they're not infallible. And a lot of times they're not very good at reading market sentiment. If they short on leverage and the market goes other way, they can get screwed as well. And they're probably shorting a lot on leverage if they are. So the thing is, they don't have complete control over the market. They're not really a hive mind, and they're definitely not infallible. They're actually quite fallible. So they don't have complete control. And a lot of times, like, you're just looking at sentiment anyways, because sentiment can actually drive a lot of small retail FOMO. And the thing is, with the Bitcoin market, you think there's like the market cap's like 200 billion. There's not actually 200 billion in the market. A couple hundred million buy or sell on any one like small crypto can easily push it up or down 200 or 300%. So like, it's really hard to say. And like the biggest whales really only delve in Bitcoin, so they're not really involved in the other altcoins at all. And that's because if you manipulate Bitcoin, you manipulate the rest of the market, because the rest of the market follows Bitcoin. So if you're talking about like altcoin manipulation, there's really not as much, and it doesn't take as much money to manipulate some of the altcoins. And since everyone knows like the altcoins just follow Bitcoin anyways, the main one that all the big whales manipulate is actually Bitcoin, and they're not perfect. They don't work in unison. And sometimes, like, a lot of people just have to admit that they're just not good at reading the market. I don't like people that make excuses and blame everything on whales, because you can't blame everything on whales. Like, it's just true that sometimes you suck at reading the market and you kind of like screw it up, and then you try to blame it on a whale. That's the same thing with like a lot of these theories, especially the XRP theories. Like, they never really happen on time, and then they just blame the whales for the theories never happening. But honestly, if you believe that, like the IMF was going to adopt, your coin on this date, or it was going to do Swift was going to do some big takeover on this date and it didn't happen, it's just because your theory sucks and it's not true. It's not because of any whale. And the thing is, thinking like that's very dangerous, because if you think like that, then you don't ever really have to, you can always just make more and more excuses, which is exactly what they do. And if you always make more and more excuses, you never really revise your way of thinking. You never realize that your theories are crap, and you never realize that you're just bad at predicting stuff. So you don't really try to learn. You don't really try to learn more and revise your theories into better theories or better predictions. You're just kind of like stuck in your own hole. And that's not a great way to actually become a good trader. That's just a great way to get into the poorhouse. So the thing is, like, don't always blame whales for everything, because while they do control some things, they're not all-knowing, they're not omniscient, they're not a hive mind, they don't all act together in unison, and sometimes, we've seen many times that whales become guppies. So the thing is, like, if you're not doing well in trading, actually look at your predictions and why they're wrong, and don't just blame it all on whales. If your crazy theories don't come true, just realize that your theories suck, and it's not all the whale's fault. So because whales, while they do actually have some control over the market, they don't have complete control of the market. And like public sentiment with stuff on like CNN, CNBC, with the mainstream media stuff, they do actually affect what some of the market thinks. And people, like, the markets can actually rush in, fund managers can actually rush in, and there are a lot of things going on behind the scenes, but there's also a lot of psychology with people as well. So because of that, whales' control over the market is definitely not complete, and they're not to be blamed for everything. Although you can blame stuff like, plus token scams for dumping the market at certain times. So that's the episode for today. Let me know what you think. Like and subscribe and hit that bell notifications button. Thank you and have a nice day.